Hello, today is Friday. It is June 9th, 2023. Wanted to go over some charts to kind of show you what I'm seeing. Overall, broad participation in the market, which is not a bad thing. Are we a little cooked in some areas, in my opinion? The answer is yes. We are actually hedging into next week, meaning we're being cautious into next week. We're putting some positions on to protect. Why is that? Because CPI inflation data is next week, which drives huge moves both directions. We have the Fed meeting Wednesday, and we have quad witching, three of the biggest events that tend to move the market largely in both directions, and there's not a lot of rhyme or reason to it. So what does that mean for me? Size down, don't do anything stupid, don't lose gains that you've gained over the last couple weeks. So overall, the market, what we wanted to see was names like IWM, which is the Russell 2000, and the Dow participate. And they did. And that's very, very good. So the NASDAQ had been killing it, and it's still doing completely fine. But could these names help when this needed a breather? And the answer was yes. Obviously, on a day like today, you can see on a day like today, it's wild what is happening. So you can see IWM was up 1.9%, but look today. I mean, if you think that this is easy, take a look. IWM was down 0.81% today. So at one point, the NASDAQ was up over 1% today, I believe. The S&P 500 was up 0.7 at one point. So we're hitting key levels, and there's nothing bearish about any of this. It's just the risk reward is not great, in my opinion, too much more to the upside. So short term, I'm protecting. What I think is going to happen, and again, this is not a recommendation offer to buy or sell. This is for clients, keeping them aware of what's happening. So I'm going to start the timer and we'll hit the ground running. Okay. So the key levels that we're watching, again, there's nothing bearish about any of this. Okay. To show you the 1 week. Nothing bearish about any of this. This is just, it's been a huge move. I'm going to protect a little bit, okay? So I'm not bearish. I just think we're going to test some levels that have been a straight up move. What has been the trend over the last couple weeks? Monday, Tuesday, Wednesday, sideways or down, which was the case, and Thursday, Friday up. That happened again. And in fact, Friday was up a much, much higher than this earlier in the day, so I'm glad I didn't chase it. So let me switch charts here to this one, so you can see the key level, if I'm being honest with you, that I wanted to see tested before July was 43.25. We hit 43.22, almost 43.23. That's the top right here. That is a huge move, okay? It's almost out of the cloud. It's a little bit too much for me, if I'm being honest. There's nothing bearish about any of it. So I have an opinion that I think we're going to test probably 280, 4280. And I think that because, number one, it's the 5-day moving average and it's the trend line. So I think that could be a magnet next week. Are they going to make it easy to go there? No, not at all. In fact, this entire next week, they could just squeeze the entire time because they can. So overall, what I'm seeing is good things, broadening breadth. As you can see, this is as of Thursday. This is going to be a little weaker because IWM was a little bit weaker today, which is the Russell 2000. But you can see here, this is not a bad thing. So start the week, we were right here, and boom, move up. You can see names like IWM participating very well. Almost a straight up move this week. I mean, it was wild. And then some give back. So you can see overall, it's almost like a cup here. Could we go a little bit higher? Absolutely. And I will adjust accordingly should I need to. New York Stock Exchange, that's what I showed you. What are some other names that I had in here? So IWM, QQQ, just to kind of show you how extreme this move has been. It's consolidating well, so there's nothing bearish here, but it's been up here for quite some time. That's not a bearish thing. It was just getting a little bit cooked, in my opinion. So to me, I thought a hedge right around 43.08 is where I got in to short. We'll see what happens there. I'm not bearish. I just think the risk reward is better to the downside short term. I think that this could be a magnet, and I think it could get bought. So 42.80 and 42.67, I think, could be a buy zone for a lot of people that miss this move. So overall, I think you got to be cautious a little bit short term, but would it really shock me to have a gap up Monday? There's nothing preventing that right now. There's a lot of good things happening. So we talked about, growth versus value. I wanted to show that to you. You can see here, value did play catch up, which is exactly what we wanted to see. This was extreme. Value got bought. Now let's see if we hit some headwinds. So a couple of things why I'm hedging here. Number one, there's a lot of events. Doesn't mean we won't get through them. We usually do. So I just think a little bit of downside, make a little coin and get out of that position. So that's my intention there. Overall, this was another reason why I thought, if value can't continue to help here, I think growth might struggle a little bit short term. That's my thought process. 43.25 basically hit. That was my target to the upside for the month. You can kind of see I don't love the risk reward too much higher here, but it'll probably test 43.25 sometime next week, and I'm a realist about that. So overall, nothing bearish here. In fact, what is it doing after the market? After the market close, it's kind of going sideways. So nothing bad here. But so here's the summary. The market is all about risk reward. How do these moves happen? You're like, Jonathan, nothing's changed whatsoever in the picture. Inflation is coming down, and that's good, but you're hearing all this negativity in the analysis, in reports, articles, like, hey, this is gonna tank. How does this happen? That's usually when this happens, because the majority are still short, and you get a couple buyers in, it just squeezes like crazy. That's how you have, check out this move. And I was in this move for a little bit, but not as long as I wanted to. Talk about a move. May, just straight up 5-day moving average, tap, 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 boom. This was up, I think, 6%, over 6% today at one point. So is this extreme? It seems like this that concerned me a little bit. You don't short it. You don't short a trending stock because it can continue just like it did here. So I like these names, but they're just a little extended for me. Like, that is a heck of a move. To me, I was almost thinking, hey, I'm bullish here. I am bullish, but this looks a little capitulation to the upside. To me, doesn't mean it's going to be, but I just didn't like my risk reward. And so I took the opposite side of the trade and went short 43.08. 43.08 was my short. Okay. So I'm going to manage that. I'm still bullish. I'm just thinking a little bit downside could be the best thing that could happen for this market. And I think people are going to be forced to buy during these events. So it's right to remain optimistic here. But I am hedging short term, if that makes sense. So I like what I'm seeing. I think it can continue, but would it surprise me to have a Monday, Tuesday, Wednesday struggle zone? Wouldn't surprise me at all. But it could be a situation where they squeeze all the way up into those meetings. So we'll see. But overall, we did have a positive week. I didn't keep up with the S&P 500, but you got to understand here, like, I was in the market a total of probably 2 hours and 45 minutes this entire week. That just shows how volatile this market is, and you can get in and out quick and take a lot less risk. Okay, so there were some opportunities that I wish I would have taken earlier in the week, especially Thursday. This morning, I wish I would have bought when I wanted to, but if you miss it, you don't chase, and that's a summary. Like, had I chased this would have been a rough day right here. If I would have chased the 43.25, this came down 25 points. Like, you would have an ugly week. And that's what's hard, is it's still an environment where you can't chase moves. you almost have to buy every dip, and every dip is being bought for now. So until that changes, it's right to buy those dips and get out of my hedges. So overall, positive week, we'll take it. In terms of the merger, we're working very hard to make this happen. We have a name for the new company. We're excited about it. Can't disclose any of that yet, but the legal stuff just takes so much time. So hang in there. I know I keep saying July, and I was saying June, but kind of want to start halfway through the year right on the dot. And I'm kind of hoping we see some downside in the market so we can get better entries with this strategy. So the strategy in general is going to be sector rotation, which means, that there's 11 or 12 sectors, and evaluating which ones look to have the best risk reward. So this week, what I wanted to see was energy, and I wanted to see financials pick up. And what they do, they picked up, and they really kind of gave the areas that were leading XLK and XLC a breather. It's exactly what you want to see. A rotation under the hood. The names that were beaten down hold the market up, while the names that had exploded higher take a breather. Okay, so maybe that happens with a Tesla. Some names, we're getting some internal rotation in the QQQ, which is the NASDAQ. So overall, there's nothing bearish on any of this. Price action is really good. I'm just playing a risk reward, saying I'm wondering if we see some downside, if there's going to be some weak hands that just say, I'm out. I've had a heck of a week, or last 4 weeks. I've had a heck of a month. I'm not going to participate the next, week, because if there's a week to have a bad week, this would be the one. I mean, it's random. It's very difficult to do well in these weeks. You can make a lot of money, but the moves are so big and so fast, you don't have to take a lot of risk to get the gains that you need. So you could take 50% risk and in and out, and really make sure you lock in gains in these weeks. And that's kind of what I expect to do. So overall, risk reward, I don't love to the upside, but on any dips, I expect them to be bought. So overall, it looks pretty good. We're getting the internal rotations when we need them. We're getting internal rotations within technology as well. So one day Tesla will be up, take a breather. It didn't much this week, but Amazon would take a big breather and rotate back and forth between names inside of the QQQ. So internal rotation is very, very good. So overall, seeing good things. I'm protecting into next week because for many of the reasons that I stated, 43.25 hit. That was kind of my target for the month. So it hit. I didn't chase it, and we got some pullback, and I expect hopefully that 42.80 hits, get out of that short and participate hopefully at the upside. But we'll see. We'll see. If it keeps going lower, that means we're going back into chop, and if there's a week to go into chop, it would be the next week. So overall, I'm not bearish. I'm just a risk reward trade, period. So thanks guys. Have a good weekend. See ya.